Welcome to the Contributors Corner, where Michael Succurro from Spark Financial and I shed a spotlight on topics that could impact your portfolios and build a bridge between unsuspected sectors. Today, we're actually diving into something that's on the minds of Canadians coast to coast, and that's housing. It's not just about prices anymore, it's about whether owning a home is still even a possibility. And with an election on the horizon, this conversation has serious weight for renters, buyers, and investors alike. First off, hey Michael, good to see you again.
See you as well, Lyndsay. Thanks for having me again.
Let's jump right into all of this then. We're going to start off with some affordability and really getting away from us if we think about that. I mean, home prices, they've skyrocketed over the last decade. And if we look at that, they haven't exactly been keeping pace with wage growth. I mean, according to the Real Canadian Estate Association, I believe the average home in Canada now costs well over $700,000. And that's not even including cities like Toronto and Vancouver. That number could be easily pushed past the $1 million mark. And it's not just the ownership that we're talking about anymore. So rental rates are climbing fast too. I know here in Vancouver, I mean, there are rental bidding wars going on. I don't know how it is in Toronto. Maybe you can give us some insights in that. In some major cities, rent is up more than 20% year over year. So if we look at that from many of the young Canadians, homeownership feels less and less reachable now. So, Michael, when you look at this from an investor's point of view, just the investor's point of view, how does this shift in affordability impact market behavior?
Yeah, absolutely. So it impacts it on both sides of the spectrum, as the investors that are currently holding properties versus the new investors that are trying to get into properties. So the investors that are holding properties over the last 10 years, obviously they're static, especially in the last couple of years, as their property values have skyrocketed. So they're able to offload those off their portfolios and obviously cash in on the large gains that they have made. Now, for investors that are looking to enter the market, like you had said, that grasp is getting further and further away, as it feels that the home values are rising a lot faster than the wages are rising to compete with them. So a lot of that affordability seems very, very far out of reach right now for first-time home buyers or current homeowners that are looking to grow into that next property, as well as any investors that are looking to acquire more properties to their portfolios. And actually, funny enough, especially in Toronto right now, rental rates are actually falling, especially in the condo market. It's more of a supply, less of a demand. So what's happening, like any supply and demand issues, is renters are lowering the rates because they'd rather have someone in there paying some certain dollar value versus not paying anything at all. So we're actually seeing the third month in a row with a decrease in rental rates.
So is that because the supply is way up and the demand is getting less, or is that because they're looking over quality to quantity? Like, why do you think that is?
Yeah, it's a little bit of both. It's definitely quality over quantity because, again, every province varies. But in Ontario, courts are backed up, I'm hearing 9 to 10 months now when it comes to tenant-landlord cases. So I would rather have somebody in there that's a lot higher quality that I know is going to pay me every month versus someone that might say they're going to pay me, let's say, $3,000 a month and not pay me a single dollar versus someone that's going to pay me $2,500 a month. And I don't have to worry and I could sleep every month, but knowing that the check hits the account and the money is going to clear. On the other hand, it's also, again, supply. There's many of condos right now that are completely vacant in Toronto. A lot of builders are actually flipping over their current developments into rental condos, due to the fact that many buyers were walking away from their deposits. So we're seeing a couple buildings right now within our area here in the GTA that have switched to, they have big rental signs on them now. So at least the builder could recoup some of their funds, given that, again, people are walking away from their deposits, not closing on the purchases. Courts are long ways away to fight against the buyer that have walked away. So in the meantime, you're better off just trying to rent it out for, like I said, it's better to get something than nothing.
Yeah, at least a fraction of what, your cost would be. Let's flip actually over to the upcoming election. So what are the parties offering? I mean, what are each party offering? And if you look at that from a different lens, how are they fixing the problem? I mean, the Conservatives are focused on supply, cutting red tape, pushing municipalities to build faster, and offering incentives to private developers. Now, if we flip that, the Liberals, on the other hand, they're leaning into support programs, from first-time homebuyers incentives to rent-to-own programs, and expanding the national housing strategy with a focus on affordability and social housing. Now, the question for voters becomes, do we need more market freedom, more government support, or a blend of the two? What do you think voters, especially those with money in real estate or REITs, should be paying attention to in these platforms?
Well, I feel we definitely need a blend of the two. You want to push that red tape, but you also want to have affordability. Now, when it comes to pushing that red tape, I feel like that's something that's more geared towards investors. Investors want to see developments move a lot quicker. They want to see their own properties are able to develop. You take somewhere like Alberta, where it's a lot easier now to convert a property into an MLI Select program, which is a multi-unit residential home over 5 units that they're able to construct to, again, create more housing for many people, as well as increase their portfolio. They're taking a single family dwelling property and now flipping it over into a 10 unit, 12 unit, whatever it may be. And Alberta has actually pushed that red tape along a lot faster than some provinces like BC and Ontario. Ontario, the big joke is that you want to get into development and you're a little fish in the big sea here. You go on a merry-go-round of trying to get past the red tape. So you finally got this permit, back on the merry-go-round, we get the next permit, back on the merry-go-round. And sometimes you're looking at 5-6 years where some people just simply give up on the project. And I feel like that's a huge issue because it's not so much about affordability. Affordability comes due to the supply. The lack of the supply has caused that greater issue that we're not able to purchase properties. So again, lower supply, higher demand, higher requests for prices. And if you look at the stats, CMHC is saying we need about 3.5 to 3.6 million homes by the year 2030 to keep up with this current housing crisis that we're in.
Yeah, I mean, can we lean into that a little bit more? I mean, the challenges here, there's zoning restrictions, there's labor shortages, there's community and resistance to that. So even with the best intentions, can we actually build fast enough to cool the market? What's your take on this? Is supply side acceleration even realistic, or is this just another campaign soundbite?
I think we definitely can build fast enough, but again, there's various issues that come across the table. The first one being, again, talking about the red tape, getting permits fast enough, zoning fast enough to actually build these properties. Then the next thing you have to look at is skilled laborers. The issue right now is with a lot of new immigrants bringing into the country, there's not enough skilled laborers that are actually coming into the country to assist with this, as well as the current existing population doesn't have enough skilled laborers to actually support this demand. And then on top of that, with all these tariffs going on right now and increase the cost when it comes to material, it's also very costly to build a property. I had some clients that were doing renovations during COVID, and buying lumber was like buying stock and shorting the market or increasing the market. They would buy a 2x4 for, let's say, $4 one week, and then next week it's up to $7, next week it's up to $8, and it just kept increasing. And again, it goes back to the home price is increasing, but the wages are not increasing. So now the material is increasing astronomically, but again, those wages are not increasing. So again, that's where it goes back, blend of pushing the red tape, but also creating affordability.
Well, I remember during COVID, I think that was the thing that everybody did was just renovation. So I think they pushed those prices up because they knew people were doing that. However, on the flip side, there is also the foreign buyers and the speculation around that. So, foreign ownership bans and speculation taxes have been introduced to try and curb the demand that could be pushing those prices up. But the long-term impact is still up for debate. Some parties want even stricter enforcement, while others are arguing still that there is more of a distraction here. I mean, a convenient political target that does little to address deeper structural issues in housing. So if we crack down on investors, that might sound good in a campaign ad, but without new supply, we could be right back where we all started. So here is the thing. How much of an impact do you think foreign ownership really has on Canadian housing, the pricing, the demand, all of those things? And should investors be concerned about new restrictions?
Well, I feel, again, there's two sides of the coin when it comes to foreign investors, as I've dealt with many of them in the past before this ban came into play. So the side that I'm on is, of course, I wasn't a huge fan as to a new condo development coming and a foreign investor, one investor would come in and buy the whole floor. I think definitely there should have been tighter restrictions on that. But on the other side, we have to also look at how much we're charging in foreign tax, new money that's coming into Canada. And again, we are a country of immigrants. There's many people coming here that are not having that PR status right away, but are coming very cash investment heavy and want to start owning property here. So I feel like that also unstimulated the economy here as we lost in a lot of foreign buyers' funds flowing into Canada, as well as a lot of the taxes that we're charging and imposing on these foreign buyers. So again, I get where the statement came from to ban the foreign buyers to obviously not cause those issues where someone would come and buy up a whole street or buy up 2 or 3 floors of a condo building. I think better restrictions could have been put into play to benefit us, our economy, and the foreign buyers all together.
Yeah, I think maybe looking more long term on the consequences that whatever action is going to be on the rest of the economy. Let's actually flip completely over and just talk about the mortgage policy and the financing tools. So this is another big talking point with these campaigns, mortgage rules. There is a discussion around easing the stress test, offering long amortization periods that you and I have talked about many times, and really giving the first-time buyers access to low-interest loans. But here's the risk. If it gets easier to borrow without a matching increase in housing supply, it could just make prices rise even more. My opinion. I don't know, maybe an unpopular opinion. It's like pouring gas on a fire while trying to cool it down. I don't know if that works or doesn't work. I don't know. So from a lending and finance perspective, does loosening borrowing rules help or hurt in this environment?
It's definitely a double-edged sword, especially with what you just, your comment right now is that's what we saw during COVID. Money was cheaper, prices went up, people were able to borrow more, and we saw this huge impact on the housing prices as these rates were dropping. And that's what we're sort of seeing right now with the rate cuts is they have to really do it a lot slower than they are. Maybe it could even be the reason why they held the most current rate cut was, again, due to that fact that people are just very blinders on, money's cheap, I need to buy this house. And that's where we're stuck in between. They want a buyer's market, sellers want a seller's market, and we're trying to find that perfect balance. And that's what the double-edged sword is right now with these restrictions. So what I feel is that it can't just weigh so heavily on the rates. It needs to weigh on the products, on the amortization, on the stress test to ease people into the market, but also not have a huge impact on the prices. So I'll give you an example in the US where we offer mortgages as well. What's very popular there are 10, 15, and 30-year terms with a match in amortization. Versus in Canada, many people think there's only maximum a 5-year term, but many banks also offer a 7 and 10-year term, but they don't have favorable rates. So that's why we go into this ebb and flow market, every 3 to 5 years is given to the fact that people are locking in with a 3 or 5-year rate and having to come up on renewal for, right away within 5 years. That's what we're seeing right now, where people locked in for 1.5% and they're now renewing at 4.5% 5 years later. Whereas in the US, you take COVID time where rates were as low as 2%. A lot of people locked in on a 30-year term at 2%. So they're not worried about that mortgage at all. They're not worried. They don't have the same stresses that we have right now with renewal rates coming up because many people are locked in for 10, 15, and 30 years.
Well, I mean, this actually is a story that's not just about the big cities then. So we all know Toronto and Vancouver dominate the headlines all the time with affordability challenges that are creeping into rural and suburban areas too. So as that urban core becomes unaffordable as well, more people are getting pushed out and those outer regions are feeling the pressure. Now, we also have to talk about Indigenous housing. That is a big one. The North and the Atlantic of Canada, all of which need tailored strategies that can't be solved with a one-size-fits-all approach. So what do you make of the growing regional divide and how should policy adapt to the diversity across the country?
Yeah, it's very tricky because it's like we say, they try to do a one product fits all, which again, it's very difficult, especially in a country like Canada. Whereas, yes, in the US, many states, they have their hubs, they have their larger cities, but that's almost in every state. Whereas funny enough, this morning I saw the image of Canada and what they had done was colored in where 75% of our population lives. And if you look at that, it's Southern Ontario, Southern BC, and Southern Quebec, which is all close nearing the borders. So you look at the grand scheme of things where there's larger income when you come to when you look at provinces like British Columbia, like Ontario, and like Southern Quebec, given they're more major urban cities, and lower income in these less dense, less populated areas. So how do you have a product that is a one size fits all? I feel, again, double-edged sword. They should look at it province per province or very specific to the region, which we do see sometimes. For example, here in more northern areas in Ontario, there are credit unions that deal with farmers, as an example. whereas they understand how to underwrite a deal for a farmer versus maybe larger banks won't. Now, why I say it's a double-edged sword is because then it comes into the classic debate where it's like, well, why do they get this favoritism over us? Why do they have easier restrictions in Nunavut versus us here in Southern Ontario? So again, it's dealing with that double-edged sword and trying to figure out what's the best for all of Canadians. And that's where they come up with this one-size-fits-all. I feel, again, it should be somewhat region-specific when it comes to maybe amortizations or stress tests, or look at the income or even the population. Many lenders do not like areas that are populated less than 30,000 in population. Many lenders as well, they'll look at as far as a 10-kilometer radius from a major urban area. So if your property is at 10.5 kilometers from a major urban area in a smaller, dense market with a lower population, it's very hard for you to get lending to actually put more money down. So that's what, again, it's very tricky. The more favorable area where banks want to lend are, let's say, Toronto and the Greater Toronto area, where a lot of developers are now building more north, but the population and the rules are not working into their favor when it comes to actually purchase their property.
Okay, so if we look at each party for this election, the Conservatives, the Liberal, the NDP, break down the housing policy for each one. Do we know this?
Yeah, so I'll give you the Conservatives first. They're focused on increasing supply by cutting red tape and pushing municipalities to build faster, incentives for private builders, and to crack down on regulations slowing development. Liberals promise of newer homebuyer support, such as first-time homebuyer incentives and rent-to-own programs. National housing strategy expansion focus on affordability and social housing. So again, it's really on what side of the line you're on, whether you want to push for developers to build more, or you want to move into this more of a society of affordable housing and social housing, which again are, very fancy ways of saying, group housing, affordable housing, government housing, which a lot of people are not in favor of right now.
Absolutely. So the bottom line, with housing now a top election issue, the outcome of this vote could determine more than who forms the next government. It could actually reshape whether the dream of owning a home remains a possibility for the next generation. So as always, these conversations are packed full of useful knowledge for your portfolio decisions. And remember, these are the opinions of our own with vested interests in particular assets and companies. Always be sure you speak with your financial advisor and know your own risk tolerances. That's it for this episode. Join Michael and I next time as we continue to unveil the evolving world of investment insights and sector education. Thank you so much, Michael. We'll see you soon.